Hey folks, welcome to verifiedinvesting.com. My name is Gareth Soloway, Chief Market Strategist here. Now, in today's video, we have to take a look at the Dow Jones Industrial Average. It has just broken major daily technical support, and this could signal a bigger move to the downside coming. So let's dive right into the charts. No BS, just charts here at Verified Investing. And when you look at this chart, there's no lines on it yet, right? It is simply a candlestick chart. One of the things here that caught my attention today is a simple trend line taken from the April 7th lows. And remember, when you find key levels, you always want to find the trend lines that go from the biggest, most important pivots. And I think we can all agree the drop into the April 7th low, which again was the Liberation Day sell-off, that again is a major low. So we take a trend line there, let's put it in, and we connect it through the lowest point following since. All right, so notice how it doesn't hit here, but right here it hits, bounces, hits, bounces, hits, bounces, and look at today, folks. We are breaking below that level. And what does that tell me? That tells me that the market, especially the Dow Jones Industrial Average, is vulnerable here to a bigger drop with a break of the trend line. The key word there is trend. This break, again, should we see it close below, which is likely with about 2 hours left in the trading day at this point, this again could be the start of a bigger decline. All right. So that's the first thing that I wanted to pay attention to. Overall, the only other thing I'd like to just point out is look at this top line right here. This is really a beautiful thing, is if we look at a trend high pivot, to high pivot, to high pivot right here, you can see this is a wedge pattern. By the way, wedge patterns that are this sharply upsloping, they tend to break down about 75 to 80% of the time, and that's exactly what this Dow Jones Industrial Average trend line is doing. Now, again, this video was mainly to focus on the Dow here. Where could it go to the downside? Well, you always look at the first big drop kind of right here. This would be your first big pivot. This would be around 43,500. If it breaks that, there's a gap fill and pivot points here. The next spot would be 42,600. All right, so those are your downside targets. Now, one other thing I wanted to go over is we got to look at this chart here. This is the S&P 500. And what we can see on the S&P 500, again, same sort of deal. You have this long-term trend line going back to October 2023 through the low of August 2024. And then right here, hits, and hits, or kisses, and it starts to break lower. And then this is really fascinating, guys. Let me extend this out here just a little bit. Notice how yesterday we broke below and then kind of rallied back to the line. Today we opened on the S&P above the line, but look, we're now selling off back below the line. And this is telling us this is weakness. All right, if this market was strong, if the S&P was strong, we'd be way above this line right here. All right, this wouldn't be retesting and kind of testing whether or not it's going to close back below, because technically it closed a fraction below here, right? But then today it opened above. Okay, they were trying to save it, but they're not able to. And listen, we still have a little time left in this market, to be fair. So we got to give it a little time. Still 2 hours remaining in the trading day, but let's watch this closely. And then lastly, guys, the Nasdaq, look at this. The beauty of this chart astounds me. Trend line parallels. This is a classic parallel, keeping price on the Nasdaq 100 between these lines here and here. And then look, we gapped down yesterday, rallied back, and look at what happened. Earlier today, the Nasdaq rallied up to the underbelly and was rejected. Boom, rejected. And that, my friends, again, if this market was in a bull mode, we would have blown right through that to the upside. So be warned, be alert here. This is a big warning to all of us as investors. This market is hanging on by a thread. The charts, especially on the major indices, S&P, Nasdaq, and Dow, are all pointing to possibly a bigger breakdown here in the coming days. Now, what's interesting is we have the jobs report coming up, and then we have the Fed decision coming up. Obviously, these are all things that could derail this bull market that we've been in. Now, listen, on a correction basis, we look at stepping stones on the way down. You don't never, really, people that kind of say, oh, we're going to drop 20, 50%. That's just them speculating. But when you look at charts, you say, okay, where's the next technical support? That's what I did with the Dow when we went over the Dow and the levels. I do think we could be on the verge of something bigger, but let's follow the levels to the downside. We come down to a support level, we see if it holds. If it breaks, it goes to the next one. If it breaks, it goes to the next one. In general, these wedge patterns and channels that are breaking, that have been around for months and months and months, and even in the case of the S&P, a trend line that goes back a couple years, that would tell me it's probably a bigger breakdown, but there's no guarantees. We let the charts dictate. All right, guys, thank you so much for tuning in. Short, sweet, simple charts, no BS. That's what we do here at Verified Investing. Come check us out, verifiedinvesting.com. Take care.